Hi guys, in this video we are going to record about the quick revision of audit. So we're going chapter wise, and in this quick revision video I'm going to revise the chapter 1 all parts as quickly as possible. So as you see there, this is about the very basic concepts involved in doing the audit. So let's start with the basic definition of doing the audit. So this is the coverage. Here I'm going to talk about the definition of audit. Then I will be talking about the objectives of audit. Once we discuss that, then one of the fundamental points in audit is the inherent limitations involved in doing the audit. We will discuss that. And then we will also be talking about audit as a discipline is related to several other areas. So what are those other areas that audit is related to? We will also talk about the relationship with other areas. Then I'm going to take you through the standards now that are applicable to your exam, and what are the standards and how is the flow involved in that particular standards. Not only that, we will also be looking at two very important parts here: the quality control aspects, and of course agreeing to the terms of audit engagement, which is the kickstart of audit process with standard number 210. So let's get started. Let's do this. So you're going by the definition here as to what exactly is audit. So audit, as you know, is a independent examination. Audit is a independent examination. Now see guys, there's never a reason to by heart any definition. So every definition you go by raising some questions. When you raise questions, you get answers. That's when it makes it the definition, and that's what becomes easy for you to remember. Here let's ask 4 questions. Right? What is audit? So first question that we're talking about here is what? What is audit? It is an independent examination. Obviously, the next question raises as to of what? Of what? It will be financial information. Now, why are we using the term financial information and not financial statements? Because we are expressing an opinion on financial statements, but we are not just checking only financial statements, right? So financial information is a term that includes financial statements plus all of books, papers, vouchers, all of that. Books, papers, vouchers, and contracts, all of that are included in the financial information. So audit is an independent examination of financial information of an entity. Now when you speak about the next word, obviously the question is, okay, you're doing what and of what and whose work is it? It's pertaining to an entity. Now, so and is use the term entity, you have to glorify the term entity. What exactly are you speaking about? Entity, this could be profit oriented or not, irrespective of size or legal form. So this could be a proprietorship entity or a partnership entity. This could be a company, society, trust, AOP, BOI. So go for it and you have all of it, right? Independent examination of financial information of an entity, whether profit making or not, irrespective of its size or legal form. The biggest question of all, why do we do all of this? Why do we do all of this? We do all of this when such an examination is conducted with a view to expressing an opinion, that being the complete idea of audit. The major audit objective is to express an opinion. So end of it, when you deal whatever you deal, you need to express that opinion. So which is what we are looking at in terms of what audit is. Audit is an independent examination of financial information of an entity, whether profit making or not, irrespective of its size or legal form, when such an examination is conducted to express a opinion thereon. Moving up next is the biggest question here: what are the overall objectives of audit? So this piece of overall objectives of audit is discussed in standard number 200, which discuss about the overall objectives in conducting the audit, and it says what, that there are two pieces to the statement. Piece 1 being what? The overall objective of audit is to obtain a reasonable assurance. Now we all very clearly know that we use the word reasonable, not absolute, for a simple reason that we are going to see very soon, that it is not an absolute assurance because of the inherent limitations. Because of what? The inherent limitations involved in doing the audit. So that's a very basic point. So the overall objective of the audit is very clear. It is to obtain reasonable assurance about the financial statements. Fine. What about the financial statement? That they are free from material misstatement. To obtain a reasonable assurance about whether the financial statements as the whole are free from material misstatement. Okay, this is one part of the story. What's the next part of the story here? And obviously, after you get to that conclusion that financial statements are free from material misstatement, that you have sufficient appropriate evidences to say that, then you can go ahead and give a report on the financial statements in accordance to the standards. Whatever your findings are, you can place those findings and put up a report that is discussed in the 7 series of standards. We will also see that in detail in the coming points. So what is audit? What are the objectives of audit? And you are obtaining only a reasonable assurance, but not an absolute assurance. Guys, this question has been asked as true or false so many times. So be very clear about that, and that this because of the inherent limitations. And as you go by understanding what are those inherent limitations, why are we able to get only reasonable, okay, but not absolute? The logic is very clear. It is because of the inherent limitations involved in audit. And what is that inherent limitation? Number one, so auditor, these are about the audit procedures. So the nature of audit procedures, the very nature of audit procedures are so that we involve test checking. And in test checking, there is a portion of work that is not being tested. So wherein misstatements can still be there, inherent limitation number one. Two, the very nature of evidences. See, the nature of evidences, audit evidences are persuasive in nature rather than being conclusive. So they're persuasive, not conclusive. Remember, which is also another very important exam piece. It's only the nature of evidences. You can't get concrete evidences, so there is always still a scope. You do more of work, you can always get more of evidences. And very much the very nature of financial reporting. This talks about the nature of financial reporting. Now, why it talks about nature of financial reporting? Because it involves judgment. Judgments and estimates are used by management. So therefore, the very first inherent limitation is, you can say, the nature of audit procedures, then you can say the nature of financial reporting and the nature of evidences, and also lastly, you have all the inherent limitations of internal control which are adding up, because inherent limitation of internal control also form part of the inherent limitations of audit. Plus, you have others like fraud, related parties, and also something to do with this one, limitations with respect to time and cost. But you can't give them as reasons. I don't have time, so I'm not doing. I don't have getting the enough fees, so I'm doing it. So that's not the reason. Okay, limitations with respect to time and cost. So these are all some of the very important points that one needs to consider in terms of understanding the inherent limitations. So what all did we discuss here? We talked about the definition of audit, then we discussed about the uh, overall objectives of audit. Now we spoke about the inherent limitations of the audit. Let's get to the next part wherein we are dealing with relationship with other disciplines. Now, in between there are two small things that I would also want you to read, are the scope and aspects of audit. So what is the scope of the audit and what are the aspects covered? I think you should have a quick glance of those two concepts as well. Then talk about relationship. Okay, we have audit is not a lone activity. It has a relationship with various other areas like accounting, mathematics, statistics, economics, law. I think these are all the fundamental subjects that you also have part of. I mean, like to start off with your foundation or CPT, this is where you started with. So these are the basic areas where auditor has to have a complete idea of. And apart from that, you should also have an idea of the computer information systems, which is audit in CIS environment today is one of the prominent audits. So if you say that I don't know computers, makes no sense. And there is also, yeah, you have to have a thorough understanding of production, which is nothing but your client's business operations. Obtaining knowledge of the client business, having an understanding of that field is also something very important. And behavioral sciences, now that doesn't again mean that you have a degree in psychology, but definitely it makes a lot of sense for you to understand how it is actually involved in dealing with different people. Now you have to deal with your own article students, you have to deal with your client. You know, you can't be so ignorant and believe in everybody. Somebody may lie on face with a straight face and you would get away with that. So you should be able to have a proper understanding. It's called tact, the art of dealing differently with different people. So behavioral sciences are about that particular tact. and then you have to have an understanding of financial management, which I believe you are doing within capital budgeting, capital structures, ratios, and have an understanding of how to manage your finances. So all these attribute towards what the areas with which audit has a connection. So bottom line, audit is not a lone activity. Audit is connected to all these areas that you see there. And there have been questions that how audit is connected to behavioral sciences, how financial management and audit are related. So these questions have come in the past in the exam. So always they can come again. So be alert with respect to that particular thing. Alright, getting the main part of the story right now. Here are the look at the standards. What are the standards that you're talking about? Now guys, as such, standards are recommended by ICAI. There is a Audit and Assurance Standard Board of ICAI, which is recommended the standard. ICAI is a member of IFAC, which is a global body which has International Audit and Assurance Standard Board. So the IAASB has issued 5 types of standards that you see there on screen: standards on auditing, standards on review engagement, standards on assurance engagement, standards on related services, and standards on quality control. Now, thankfully, the content in SQC is applicable, and of these standards, 26 of those, subject to the latest amendment where 9 standards have been pulled off, 26 of those are again pretty much part of your syllabus, because the 8 series, the totally 38 standards, 3 of them are in the 8 series, which is not part of your syllabus right from the beginning, and then they have excluded a few standards from the existing standards of 200 to 700 series also. So therefore, you are left with a few standards to deal with the quality control standards and the balance 25, 26 standards. Right. So who issues the standard in India is central government. That is, again, if you look at this company audit part of it. So 143 subsection 9 and 10, they talk about central government prescribing the standards. But as of now, the procedure is not followed. Till the time central government issues any new standards, those standards that are recommended by ICAI, which are these 5 type of standards, they are considered as standards for the purpose. And then same way when we go with standards and auditing, now this is our piece of discussion, right? So let's go and broadly see what are the standards and auditing broken down into. So introductory matters are dealt between standard 100 to 199, not much of a tension for us. There are only introductory matters, but from where are we bothered about are this the whole of 2 series, wherein you have all the basic principles governing the audit, right from stand number 200 conveying the overall objectives audit to 299, it talks about responsibility of joint auditors. Now all these, once you are thorough the basic principles, you might want to start a very important phase of audit called the risk assessment stage and the planning stage, because the planning is the most important part of audit, because the better you plan, the better you can perform and get the results. So the third stage, audit, planning and risk assessment, there are standards, 4 standards in the 3 series, 300, 320 on materiality, and 315 and 330. The 2 4 series standards, 402 and 402 and 450, which are now not part of your syllabus anymore, but they are still part of the story, right? So basic principles governing the audit, of that we have the 2 series standards, wherein you have 200, 210, 220, which is again on quality control, 230 on documentation, 240 is on fraud, 250 is on laws and regulations, 260 and 265 have been pulled off, so you are left with 299, which is on responsibility of joint auditors. This. Moving up next is the next part of the story, wherein you're bringing audit evidence, one of the most important standard series, whole of 500 to 580. There are 11 standards here from 500 to 580, of which you don't have 540, which means you have left with 10 5 series standards, are quite very important. Then moving up next, you may want to rely on the work performed by some others like the other auditors, internal auditors, or experts sometimes. So using work is in the 6 series. We have 3 standards here: 600, 610 and 620. Now after the notification, 600, 620 don't remain part of your inter syllabus, only 610 is part of it. So all of these standards, and then of course the most important 7 series standards on reporting, where we have again 700, 705, 706 and 701, wherein we also are supported by 710 and 720, whereas 720 is pulled off, so only 710 is part of the syllabus, right? So yeah, 260, 265, 330, they said the standard is pulled off, but they didn't, like really give 330. But if you look at the content of 330, it's about compliance procedures and substantive procedures. So I always have preferred discussing compliance procedures and substantive procedures, which is a very important part. So doing 330 is no harm, is what I feel strongly. So guys, that's what we have in the basic idea of standards. Very, very important piece. Now all I'm going to take you through is a very, very important flow involved in doing the audit, because this flow, the more you have an understanding about this flow, the greater the subject is going to be easy after, because this is what is the flow involved in doing the audit. And as we go on now, we will be able to see that flow, right? So the entire audit process, let's look at audit process at a glance, how that works. Audit process starts with engagement of the auditor, which is what is discussed in chapter number 210, which is the engagement of the auditor. So in this session, we will be discussing that. Now, once the auditor is engaged to do the audit, that's the first time he's being engaged to do the audit. It is called an initial audit. What does he do is to obtain the knowledge of client's business. He will obtain the knowledge of client's business. How to obtain the knowledge of client business? Again, guys, for all the steps involved in audit, there is no tension that you have to take exclusively for doing this, right? Obtaining knowledge of client business, again, 5 points are specified in one part of 315. See, actually 315 has 4 parts, okay? So the first part of 315 talks about obtaining knowledge of client business, wherein you have 5 points to catch up. Now these two here, that is engagement of the auditor and obtaining knowledge of client business, these are called as preliminary engagement activities. Preliminary engagement activities. So this is before even any stage in audit. So this is a preliminary engagement. Preliminary means even before we begin anything, right? Then moving further to the next, these are obviously the audit planning stage. Planning and risk assessment being one of the most important stages here. Uh, so these two stages, that is audit planning. Now this exclusive phase completely is of planning, and planning paves way for doing the further audit procedures. Now if you look at what are the further audit procedures, so first you will determine the nature, time and extent of risk assessment procedures. So these two go hand in hand, that is you will do 300 and also determine the level of materiality in 320. And so once 300 and 320 are taken care of, then you go to 315 to perform the risk assessment. So now once these three standards are taken care, that is planning and risk assessment is performed, then we will get to the most important stage of audit, which is called the performing stage, which is the action stage, where the entire activity keeps going. Now, which is what you need to understand here. So determining the nature, timing and audit procedures is also followed by performing of substantive procedures, which are discussed all through the 5 series standard. The substantive procedures that you perform will be helpful for you to gather the audit evidences, will be helpful to do what? Gather audit evidences. So determining the nature, time and extent of audit procedures, performing substantive procedures, and of course the performance stage is not complete without documentation, right? So let's continue this test. Step number 7 is looking at documentation. Standard number 230 and also other standards here prescribe documentation. So step number 6, documentation. If you're through with that, now like say this is also end of performance stage. Then when you are ending the performance stage, right, that is after you look at this, these 5 stages: preliminary engagement activities, planning activities, and there it kickstarts the performing activities. So which is what exactly is 230 all about. And then moving further are the 2 stages wherein you will talk about forming and reporting. So these 2 stages are titled as reporting. These 2 stages are typing as reporting. So 700 and 705, which are about the reporting stages on how we will be doing, and 700, 705, 706 and 701, all of the reporting standards. So I hope you understood clearly the 8 steps involved in doing the audit, because this is the greater clarity that anybody needs. So once again, to have a quick understanding of this, let's look at all the audit process at a glance. So these two here, these ones are called preliminary engagement activities, formulation of an audit plan and program, and determining the nature, time and extent of substantive procedures. Now you will determine the nature, time and extent of substantive procedures by performing risk assessment procedures, and of course you will also do compliance procedures once you know how the controls are. So formulation of an audit plan, this is the planning stage, And all these three, determining the nature timing, that is compliance procedures, substantive procedures, and doing documentation. This is all that these three P's. This is the performance stage. And lastly, formulation of an opinion and reporting. Now these two stages here come down to reporting. Now I hope you got the clarity on what exactly are we supposed to do in audit, guys. Preliminary engagement activities followed up by planning activities followed by performance of these three steps, and wherein all the standards come into picture, and reporting stage. So once again, let me loop you up with the standards. So standard number 210 is what you use to right after this we're going to see the engagement of the auditor. Standard number 210, obtaining knowledge of client business, part of standard number 315, one part of that, right? Standard number 300, essay 300, 320 will all help you in doing the planning, because planning and materiality very important. Then determining and performing substantive procedures. Now these two go with standard number 315, part of 330. Performing whole of substantive procedures involves all the standards from 500 to 620, wherein working papers are documented as part of standard number 230, while this is taken care by the 7 series, SA 700, 705, 706 and 701. So all of these put together will what make the entire audit process. So right from engagement of the auditor, that is from stand number 210, we have to go part by part and try and understand. So again, towards the end of the revision series, we will once look back to see whether we have covered all these steps, right? So that is exactly what we will be dealing with. And of course, if I have to be very clear, we're going to start off with standard number 210. So once again, as part of understanding what we have done, so standard number 210 is a kickstart for the entire story. So what all, now I wrote this procedure right here. We saw this particular procedure of the entire audit process at a glance. So now let me write through without their names as stages, only the standard numbers. So if you look at that, going by that, we have only standard numbers to catch up. So first we will be doing standard number 210. Right away we are doing that. 210 is followed up by, in the next session we will be catching up for 315 part 1, which is about obtaining knowledge of client business. So these two preliminary taken care. Then start at the planning stage. We will be performing stand number 300 to know about planning, stand number 320 to know about materiality, and part of 315 to do all of the balance part. So of 315 to know the risk assessment part. So this is preliminary engagement, this is planning. Now let me take you through the standards involved in performance. We have standard number 500 on evidence, 501, 505 on external confirmations, 510 if it's your initial audit, 520 if you want to do analytical procedures, 530 to do sampling, and 580 to obtain written representations of mandatory standards that you will perform here, and also standards 600, 610 and 620 if you are using any work of others. Then you will also perform SA 230 and others, because you will be doing all the documentation involved. And at this point of time where you have gathered everything, there is this small scope before reporting. So after you finish gathering all the evidences and do the documentation, before you go to the 700 series, because you have 700, 705, 706 and 701, these are standards that help you in doing the reporting. But in this piece, there is a very important force called evaluating a misstatement, wherein you will be performing standard number 450. So guys, this is the overall clarity in what sort of application we will do in the standards. If you want, you can take a screenshot of this to understand how the standards are performed and flow, and we are also going to go in the further revision sessions by doing this only. Okay, so I hope that clarifies as to what we are doing and how we are understanding. Let's move on very quickly to agreeing to the terms of audit engagement. Now, agreeing to the terms of audit engagement, this standard has 5 parts, right? There are 5 parts to the standard, which is 1, preconditions to the audit, which only when present will be taking the audit, preconditions. Then if preconditions are present and there are no limitations and you're happy with it, then you will go with agreeing or agreement to the terms of audit engagement, agreement to the terms of audit engagement. And then just in case, if this is your recurring audit, will you have to send the engagement letter again and again, or what are you supposed to do with that? You're supposed to see that, and what is the story of any changes in terms of audit engagement. We are even going to look at that changes in terms of engagement. And then part 5 is about additional considerations that don't make much of sense in terms of revision, but you can always check that additional considerations, two additional considerations are there where there are conflicts between standards and law. Okay, but otherwise we will now be covering all these 4 points to understand what are you supposed to thoroughly do in standard number 210. Let's start with preconditions, guys. Preconditions to the audit. So there are two preconditions to the audit. One, if your client is not using an acceptable FRF, then what will you be doing in the audit? So the first and foremost precondition that is required for the audit is whether the financial reporting framework to be applied in preparation of financial statements is acceptable. If I had to keep this short, you could say use of acceptable FRF, use of a acceptable financial reporting framework. That's exactly what you and I need here right now, use of an acceptable FRF. Then second one is the most important precondition, wherein you want the management to agree to their responsibilities, because if they don't agree that those are their responsibilities, tomorrow they may not end up doing it. So the first and foremost thing that you need to understand there, obtain the agreement of management that it acknowledges and understands its responsibility. How many responsibilities are there for management? Three responsibilities. First of which is preparation and presentation of financial statements. Two is design and implementation of internal controls. These two are the fundamental responsibilities of management. Along with that, because we are now doing the audit, who will provide us all the evidence? That is also management, where the third responsibility of management is to provide the auditor with access to all information, access to additional information, and unrestricted access to persons within the entity from whom the auditor seeks to obtain audit evidence. So this is only the person from whom you seek to obtain audit evidence. Now all that you need to understand here is that this particular piece where you are obtaining audit evidence, a very important part, because if this point is not done, then it leads to auditor being falling short of the evidence, which leads to lack of sufficient appropriate audit evidence, which may lead to you not giving an opinion or disclaiming an opinion, whereby the compliance to these two preconditions are the prerequisite. They're very, very important. If these two preconditions are not complied, then auditor will not take up the audit engagement. Or if there are any limitations which are prior to the audit engagement, I still didn't take up the audit engagement, I just checked two preconditions. So I hope you're clear with the preconditions. What are the two preconditions? Use of the acceptable FRF and obtaining an acknowledgement from the management that they will fulfill these three responsibilities which are theirs. After this, now if only you guys are very sure that these two preconditions are present and you can go ahead, then you can put up all of this in a written form of an agreement. But before you do that, check two things. What is that? Are there any limitations that are imposed prior? Now, all I want you to understand here is the word prior. Limitations on scope prior to the audit engagement acceptance. So if the management or TCWG, who are those charged with governance, one step above the management, impose a limitation, now that's the story. They have imposed a limitation. That means they're not letting you do what you're supposed to do. If management or TCWG impose a limitation on the scope of the auditor's work in terms of a proposed audit engagement, that the auditor believes the limitation will result in disclaiming. Guys, a simple point. When you end of the day know that it is going to result in a disclaimer, what is the whole point in taking up the audit? So therefore, it is very, very important to understand the connect here, that the auditor believes the limitation may result in auditor disclaiming an opinion. So therefore, he shall not take up that particular audit engagement. Not only that, the auditor shall not accept such a limited engagement. Obviously, when you know that management is imposing a limitation and you will not be able to give an opinion, there is no point in taking up the audit. And also to say the fact that this is like tying your legs and asking you to run, which you anyway can't. So therefore, if there are any limitations prior to this, prior is a very important before you take up. It's a good opportunity. Before you take up only things are there, so better it is to not take up the engagement at all. This is one situation. The situation number two, that you will not take up the audit engagement, is here, where other factors, what are the other factors? The preconditions are not present, right? So if preconditions are not present, if the preconditions for an audit are not present, then the auditor shall discuss the matter with management, and unless all of the law requires, but there's no law that is requiring you to do that right now, but if there's any law that requires you to do so, then do it. But otherwise, normally if preconditions are not present, again here also auditor shall not accept. So the two specific cases: limitations prior to engagement, and preconditions, the absence of preconditions. These are two very clear situations where the auditor shall not, very clearly I'm writing is shall not accept the audit engagement. It's a very important point. The auditor shall not accept the audit engagement. So this is part 1 to the standard, guys, wherein we spoke about what are the two preconditions that are required, and then the two situations where auditor will not take up the audit engagement. Now moving further here, we're going to talk about situation number 2. If only everything is good, agreeing to the terms of audit engagement, and we're going to put that as part of the audit engagement letter. What are the contents? Let's look at that. So I want you to clearly understand that there are 6 very important pieces that we will be putting up in an engagement letter. As to what those are is: 1, objective; 2, the scope. Though they are discussing the same point, I would always like to split them because they're two different aspects. Objective of the audit and scope of the audit. What are our responsibilities, which you already know that it is our responsibility to express an opinion. What are the management's responsibilities, which also we have seen as part of the 3 preconditions, that management's responsibilities are also there here. So the objective of the audit, scope of the audit, responsibility of the auditor, responsibility of the management. And now, earlier you did check that whether there is an acceptable FRF in preparing the financial statements, but right now, see, there are certain situations where the acceptable FRF may not be the applicable FRF for the organization. Now, like say for example, a company can prepare a balance sheet in T-shape format. A company can prepare a balance sheet in T-shape format, but at the same time, that is not what is prescribed. If you look at the Companies Act, what is prescribed is as per the Schedule 3 of the Companies Act. So, though you may be able to prepare it in T-shape, and it's a very acceptable form because that's also one of the forms of reporting, you cannot consider that as a applicable FRF. So, acceptable is what a framework that we can prepare and present financial statement. But the question now is it also the applicable framework? So, which is also something that we need to identify, and identification of the applicable FRF. This is point 5, 3, 4. So objective, scope, responsibilities of auditor, responsibility of management, and applicable financial reporting framework. Not just that, you will also pull off the reference to expected form and content of the audit report. See, end of the audit, what is the ultimate objective? It is to give the audit opinion, right? So now at the end of all this story, you cannot say that, we don't know in what form we have to give the report or what should be the content of the report. So it is always important that you properly in the report itself refer to the expected form and content of any report to be issued by the auditor, and a statement that there may be circumstances in which a report may differ. So if law or regulations says that it will differ, then there is a situation where it may differ. Okay. But guys, you should understand that these 6 points will be written clearly in the engagement terms only when the law or regulation does not prescribe all this. Now, if a law or regulation has clearly defined all these 6 points, point number 1, you anyway can't overrule that. Point number 2, what is the fun in seeing the law and writing the same thing again in the engagement letter? So just state the fact that such law or regulation is applicable. Instead of writing down all these points, audit shall be conducted as per so and so act. Be it audit will be conducted as per Banking Regulation Act, audit will be conducted as per Companies Act, because anyway the provisions are already told there. So if a law or regulation prescribes in sufficient detail, so it's given in sufficient detail in the law, so there's no real reason why you have to do it again, right? If law or regulation prescribes in sufficient detail the terms of audit engagement, then the auditor need not record them in a written agreement, except for the fact that such law or regulation is applicable. Just say that such law or regulation is applicable. You don't have to do anything further with respect to that. Okay. And also you should take an acknowledgement from management, a copy of the engagement letter, this is also called the terms of engagement, or in other words it's called the audit engagement letter. So get this signed by the management that they have acknowledged their responsibilities and they understand what it is. Okay. So put up all these terms. Who prepares the engagement letter? The very simple question. It is the auditor always. Remember this. A lot of people have made mistakes in true or false and all that. So it is the auditor who prepares the engagement letter and management just acknowledges. That word acknowledges clarifies that content. Okay. So that's the second part of the standard. So once preconditions are there and you guys are happy that you can take up the audit, put up audit engagement terms. Then moving further is to understand what is the story going on in case of a change in terms of engagement. Just in case if somebody asks you to change, the management asking you to change the terms of audit engagement, then very important point is auditor shall not agree. Auditor shall not agree where there is no reasonable justification. So if there's no reasonable justification, then the auditor definitely should not agree to the change in terms of audit engagement. And if the auditor is requested to change the terms just prior to the completion to a lower level, now see, you can do that. It's not a problem. Conveying a lower level of assurance means our assurance levels are coming down slightly because of the change in terms, but when compared to the old terms only. But that doesn't stop you from, you know, changing the terms to a lower level for a simple reason that if that lower level of assurance, what they're speaking about, if that conveys reasonable assurance to the auditor, so that means the auditor is still happy taking that lower level of assurance, it is giving him reasonable assurance, that is not a problem. So in such a case where reasonable assurances are given, there wouldn't be any kind of a problem. If terms of audit engagement are changed, then they obviously have to record it in a new engagement letter. Put it in a new engagement letter. You got to put that in a new engagement letter. So you don't agree if there are no reasonable justification, and if there is a reasonable justification and you're willing to change, whether it conveys a higher level of assurance or lower level of assurance, you can do that, but you just have to be very watchful about the reasonable assurance that you're picking up, right? And new engagement letter shall be put up in this particular case. And if the auditor is unable to agree, to the change in terms, now this is where a very caught up situation, this one, you are not willing to agree to the new terms, auditor is unable to agree to the change in terms of the audit engagement and is not permitted by management to continue the original engagement. That's a block. You can't go one step forward because you don't want to do the new terms. You want to continue the existing terms, but management is not letting you do that. So you can't go backward, you can't go forward, you're stuck in between. Not doing the new terms because you don't like them. You aren't continuing the old terms because management is not letting you do that. So it's a caught up situation. What is that you will do in this kind of a situation? What is that we will do? There is nothing better to do except for withdraw from the audit engagement. So when you're caught up like that, there is no situation that makes it better. So just withdraw from the audit engagement wherever possible, and obviously you have to tell people whoever are responsible that you are withdrawing. So just do that. Determine whether there is any obligation, either contractual or otherwise, to report the circumstances to other parties such as a TCWG or the owners, and just check if you have to tell somebody, and if it is so, you might want to tell that to them. Then moving up to the last part of the standard here, just in case of this recurring audit, guys, initial audit you definitely have to send an engagement letter, but when it comes to a recurring audit, there is no reason why you have to send the same engagement letter again and again unless there are any changes. So what are the circumstances under which you will send in a recurring audit? Recurring audits, the auditor shall assess whether circumstances require the terms of audit engagement to be revised. Circumstances require them to be revised. And when there is a need to remind the entity. So what are the only two changes? Where the terms are to be revised. One, where you need to remind the entity of the terms, and that's exactly when you will be sending this. The auditor may decide not to send a new engagement letter or other requirement each period. It's not needed. Why do you have to send it again and again? However, there are some factors, like 8 examples are given there. Just brush through that. If you think that entity may misunderstand the objective, any revised terms or special terms are added, change in senior management, change in ownership, change in nature. These 3 changes definitely merit you to send a new engagement letter where the entity misunderstands the objective, revise the special terms, a recent change of senior management, a significant change in ownership, a significant change in nature or size of the entity's business, a change in legal or regulatory requirements, and also a change in financial reporting framework, and lastly a change in any other reporting requirements. So if there are any of these changes, then definitely there is a need for you to remind the entity about this, and therefore you will be sending a new engagement letter. Otherwise, you will stick to whatever you have sent. Okay, so that's it guys from standard number 210, 4 parts to a standard. Preconditions being part 1, part 2, putting them into an engagement letter, part 3, if there are any changes, agreeing to the changes and putting them in a new engagement letter, and having a discussion on part 4 on recurring audits. Very clearly it is said that auditor may choose not to send this period after period because it doesn't serve any kind of a purpose doing that. But if there are changes or there's a need to remind the entity, then definitely you will need it. It's a very important standard guys. Of course, I understand it's quite lengthy in terms of comparison with other standards. Yes, of course 210 is one of the lengthiest standards, but this is how you got to break it down into 4 parts and understand. Part 5 is about additional considerations where there is a conflict between law and financial reporting standards and a conflict between law and audit reporting standards, the standards in auditing. So how will you address that? Of course, law will prevail and you should make sure that there are appropriate disclosures. So you can get to that part. To wind up chapter number 1, I'm going to quickly take you through the last part where there is a glance about the quality control elements, where in standard number 220 and SQC1 they describe these quality control aspects, and these are the responsibilities of engagement partner. In other words, the auditor, the engagement partner has to be bothering about all these points. The 6 quality control aspects, going by the first one, it is his responsibility to take up a leadership to make sure that quality is followed in audit. Leadership responsibilities for quality on audit is always resting on the shoulder of the engagement partner. So the actions of the engagement partner, he has to take the leadership responsibility to make sure that appropriate message to the other members of the engagement team in taking responsibility is sent. Understood? So whose leadership responsibility is to maintain quality? It is the engagement partner. It is also the duty of the engagement partner and all of the team members to follow the ethical requirements, which I believe you know very well, the ethical requirements of integrity, objectivity, and of course you need to add up one very, very important point, which is called as independence, wherein we have 2 concepts discussed about independence in mind and independence in appearance, and both should be there to avoid all those 5 threats to independence, right? Please go through those 5 threats also as you revise. They call the self-review threat, self-interest threat, advocacy threat, and you have familiarity threats, and of course intimidation threats. This could be a question in the exam guys, so you might just want to go through that also. Integrity, objectivity and independence, IOI, professional competence and while performing the work, due care. The rule of confidentiality, what does the rule of confidentiality say? That the auditor shall perform the audit and all the information that he gathers during the course of the audit shall be kept confidential. That is, we have to put it in other words, the auditor shall not disclose any information obtained during the course of the audit to any person. Understood? But of course 2 exceptions are there, unless it's permitted by the client or required by law or regulation, and those are the only 2 situations where he opens his mouth, which is called the rule of confidentiality, which is binding him. Integrity, objectivity, independence, competence and due care, confidentiality, and most important point is a professional behavior, where you have to maintain professional skepticism, which is undeniable fact of maintaining a professional skepticism. And what is professional skepticism? Is an attitude of 2 things: maintaining a questioning mind and being alert to conditions. So 2 ethical requirements, 6 ethical requirements as part of quality control aspect number 2. Moving up next, it's your team members who do the audit. So while recruiting, training and making them do the work, human resources, they have to make sure that policies and procedures are framed for maintaining a quality, like a leave policy, like what timing policy, when they have to come in, when they have to go out. Every firm should follow a quality control policy for their human resources. Firm should establish quality policies and procedures to make sure that sufficient personnel are there with all capabilities, competence and commitment. Randomly you should not pick up people, right? You pick up people who have capabilities, competence and commitment to ethical principles, which you read in point number 2, which are necessary to perform the engagement properly. Okay. Leadership responsibility for quality in audits is with the auditor, the engagement partner, engagement team members, all of them have to follow the 6 ethical requirements, and also while recruiting human resources, follow the policies and procedures meant for that. One of the most important points which has come for the exam so many times as a question put a start at that is the fourth quality control aspect. Before accepting or continuing any client engagement, the word acceptance is used for initial audit while the word continuance is used for a recurring audit. What should you do? SQC1 tells you to do 4 things before you accept or continue an engagement, which is you have to check 4 things: the integrity of principal owners, so like how honest they are and all that, the principal owners of the entity, their integrity aspects. If you check them, you should check our own team, obviously, whether the engagement team is competent to perform and do they have the capabilities to do that particular work, integrity of the owners of the entity, our own team members' competence and capabilities, whether the firm and engagement team will they be able to comply with relevant ethical requirements. So if this engagement is all about troubling you, and if this engagement is all about not letting you comply with the requirements, and I don't think so it's a very fruitful thing to do. So where the firm and engagement team comply with ethical requirements and significant matters that have arisen during either current or previous audits, you have to take them into considerations to again understand what implications will they have on audit. 4 very important points. This question has been asked many times in the exam. What are the factors to be considered by the auditor while accepting or continuing a client engagement? So 4 points, guys: integrity of the owners, our own engagement team's competence and capabilities, and if you can comply with the ethical requirements, and significant matters which are arising during the audit. Not only that, the engagement partner is also responsible for the engagement performance, that it is performed well within the time and also by complying the professional standards and legal requirements. So the firm should establish quality control procedures to make sure that there is a reasonable assurance that you can obtain by performing this engagement, by sticking to all the standards and legal requirements, and most importantly, setting these is of no use unless you monitor them. The firm should establish policies and procedures and make sure that you have to, such policies should have an ongoing consideration. That's a very important thing, ongoing consideration, and you have to monitor whether they are relevant, adequate, and operating effectively. Those are the words that you have to keep in mind. So you have to monitor. Simply setting up policies of no use, right? So you have to monitor them and make sure that that's the particular thing taken care of. So guys, that's what we have in chapter 1. This is a very quick revision of chapter 1, and this is pretty much, I think now you have an idea. If you have done the revision of chapter 1 already, this would be of great help, I guess, because we've done a very quick revision of the entire chapter 1. But if you have not done any revision and this is the first time you're watching a video like this, so guys, this is the pace at which you have to do revision if you have to be be ready for the exams. Okay, so if you're not able to catch up my pace, or if you feel this entire video was too fast for you to catch up, I think you should work hard enough right now, because this is time where you will have to be in the revision zone, and this is how revision works, because you can't spend 8-9 hours on every chapter which you do for classroom training. So I think the ones who are watching this, if you're comfortable with this video, you should do a thumbs up and then move on, wait for the next videos to come. And then of course, I do make sense to those people who I'm not making sense, because this guy is very fast right now. You just have to understand that this is the pace and this is the level of revision that is meriting for the exam. So very soon I will see you in the next session, wherein we will be speaking up about chapter 2 and parts of chapter 3. So things are going to go fast and the schedule will be completed in that manner. So I want all of you guys to be up to it and then keep this video. We will also be releasing videos wherein there's a cumulative marathon video to the end, whereby you can have a complete revision, but doing it in parts is always the best thing. Once you finish doing it in parts, couple of times before the exam, you can do the marathon. I will soon see you in the video number 2, where we will be covering about chapter 2, the quick revision.